Good afternoon, everyone. I'm Natalie Matala, Deputy Editor of Auto Finance News, and I'm pleased to welcome you to today's webinar entitled Digital Lending for Auto Finance, What Do Customers Really Want?, presented by the Center for Auto Finance Excellence, the industry resource for best practices and actionable advice for auto finance professionals. Thank you so much for being part of this webinar today. This is the fourth of our four-part 2016 series of webinars presented by the Center for Auto Finance Excellence through the support of Fiserv and DataScan, so thank you to them both. This webinar, which will last about 45 minutes and is being recorded, will explore how digital lending has taken center stage as changing demographics and rising competition compels lenders to hone and streamline operations. The substance of this teleconference touches upon just some of what we do at the Center for Auto Finance Excellence. The center was launched in 2013 by Auto Finance News and Fiserv for the benefit of the auto finance community. The center shares its content through events like this and at autofinanceexcellence.org, which we encourage you to join. Our goal is to share unique content and insights on the practice of auto finance, furthering the overall management performance of the industry. Fresh articles are added to the site all the time. Some of the most recent delve into how lenders need to balance their ground forces with data, are there hints of an auto lending plateau on the horizon, and 5 questions your board should be asking the Chief Compliance Officer. Today we'll discuss how to best invest in customer engagement and not just self-serve options. What are customers looking for in a digital experience? What are the steps required to develop best practices? And where exactly should lenders invest their resources in digital? The information we cover today will also provide a taste of what you'll experience at the upcoming Auto Finance Innovation Conference, which will take place May 17th and 18th in San Diego. You can visit autofinanceinnovation.com for more information and to register. Note that a recording of today's webinar will be available on the Center for Auto Finance Excellence website at autofinanceexcellence.org. We encourage you to share the link to the webinar with your colleagues. With that, let's get started. It is my pleasure to introduce our speakers, Josh Smith and Jerry Searfoss. Josh is Product Manager at Fiserv Lending Solution, and Jerry is the Area Sales Manager at Ferrari Financial Services. Josh and Jerry are going to give us a presentation, followed by a short Q&A session. Now, I'll turn it over to Josh Smith, who will present Digital Lending for Auto Finance. What do customers really want? So, Josh, please take it away.
Thanks, Natalie. At Fiserv, I've been focused for the last few years on how technology can support the changing needs for automotive lending by finance companies and banks. Prior to Fiserv, I worked for a major consumer-facing digital telecommunications company for several years on what consumers expect from their digital experience. I'm passionate about technology that brings consumers and lenders together and helps them communicate better in this era of 24/7 digital expectations. I'm joined today by Jerry Searfoss from Ferrari Financial Services. Jerry?
Thanks, Josh. At Ferrari Financial, or FFS, our customer experience strategy is critical for delivering the expectations our customers have for the Ferrari brand name by providing the same distinctive and personalized experience for their financing that they have driving one of our unique automobiles. So I appreciate being here.
We're glad to have you. Thanks. As this comment from Christine Pratt, Senior Analyst from the IT Group shows, amidst strong competition and increasing consumer empowerment, it's not a surprise banks are planning to increase the amount they are spending on enhancing customer service and customer experience. Christine maintains regular surveys of financial institutions and technology providers to analyze the top issues in the industry. But with IT budgets already stretched to manage regulatory compliance and increase operational effectiveness while also attracting and retaining customers, how do banks decide what to invest in for maximum impact? And what are the assumptions driving those investments? Fiserv has been conducting consumer surveys for 12 consecutive years, the longest running survey in the financial technology industry, including a significant expansion in 2016 by partnering with Harris Poll, a division of Nielsen. In this webinar, we'll share results of those surveys and what you should prioritize to support your customers' digital expectations. And as an example, we'll hear from Ferrari Financial Services on how they are managing their customer experience strategy. So much has been written and said about digital self-service, but what we found is that it's not about customer self-service, it's about customer engagement. Although attracting and retaining customers is paramount, finance service providers also have to engage with customers the right way, within the applicable legal regulations, and do it all efficiently to maintain profitability. Customer engagement, therefore, is a strategy that uses digital communication in a two-way conversation, or really even three-way conversation in some circumstances, such as when the dealer is involved. Our research has shown that although consumers expect to be able to do anything in the auto financing process themselves on their phone or tablet, apply for the loan or lease, check their account, or make payments, they really don't want to do it in a vacuum. In other words, the engagement with their auto finance company that reinforces the partnership and trust they place in your company, whether they're interacting with you digitally or any other form of communication. This is more than just an omni-channel strategy to ensure customers can contact you through different channels like online, telephone, or in person, or even by multiple means such as voice, paper, or on the telephone. In other words, digital is a means to the end, not the end itself.
Josh?
Yes.
It's Jerry. And if you, I don't know if you've seen this week at the LA Auto Show, one of the biggest focuses was the manufacturing in digital automobiles. So it's just a natural flow for those of us on the other side to get involved with the digital world. So I think it's very important that we figure out how we're going to approach it and how we're going to give our customers what they're looking for in this area.
I think that's a great point. So on that note, what do customers like most about their current experiences with digital? The Fiserv research uncovered these common customer expectations about what customers like most about a digital experience. Jerry, what has Ferrari seen with its customers?
Well, the marketing it's event-driven on the Ferrari side. So we do a lot of car racing events, et cetera, and they're looking for really just ease of use. How can they get their access to their information, whether it's for a payment or it's for a billing error or billing issue, and they want to be able to do it in a lot of times 24/7, as you see on the slide, because, as we all know, it's a global economy now, and our customers are a little unique on that end because just because of the things they do and the businesses they run, they need to be available 24/7. They need to have the availability to gather information 24/7. So we're looking at a couple of different ways to do that, and that's really what's driving it is their interest in being able to see and gather information 24/7.
Thanks. That's a great example. Now let's take a look at the origination and servicing processes and how lenders can engage their customers with meaningful interactions. Overall, regardless of which interaction methods a customer prefers to use, a strong majority wish the origination process was more efficient. Multiple asks for information, delays for getting that information from one place to another or from one party to another, and compliance reviews all contribute to the perceived inefficiency from the customer's perspective. While customers find value in digital communication, most also voice security concerns around the safe storage of their data and their control over the use of their data. We found customers were willing to do more digitally, especially to accelerate the origination process, as long as they feel confident in the security of the systems they were using. Reinforcing the security of the system is an opportunity to deepen trust with the customer. But self-service digital engagement is not the sole answer. A majority of consumers prefer a level of personal touch from their lender rather than applying completely online without any interaction from the lender, whether it's by phone, web chat, or email, or even in person. This is what we refer to as a digital hand-to-hold, because customers see the efficiency in digital engagement and they want to be empowered to do as much of the transaction digitally as they feel comfortable doing, especially when they know the lender on the other end of the digital handshake is a real company staffed by real people to support them.
Yeah, Josh, if I could add there also, we benefit, the financial services side, we benefit by our clients having a huge amount of trust and passion for the Ferrari brand. So it kind of follows through that when they deal with us on the financial services side, they feel very comfortable with the fact that they know who we are and they trust the information that they're gathering, and they really don't see too much of an issue there. But again, it's always in the back of their mind, but I think we benefit from where we are in that area.
Right, and I think that really supports the holistic engagement model that we're talking about here today.
Absolutely.
Okay, now let's take a look at the servicing phase of the loan. Once the loan does go into the servicing life cycle, the customer has already begun to trust the financial provider, who can then reinforce that trust by continuing to provide options for digital engagement. In 2015, the J.D. Power report found that adding digital self-service capabilities improved customer service satisfaction by as much as 80%, which is a significant competitive differentiator. Having options for how they make their payment, especially same-day posting, is very important to consumers. And Fiserv research confirms the J.D. Power findings that customer service and prior experience with lenders are big factors when making their decision. Payments are now becoming one of the most important aspects of the customer experience when it comes to servicing. Customers are now expecting expanded payment channels and real-time notifications on their account activity. Despite the indirect channel being the primary originating source of auto loans and leases, over half of consumers say that customer service quality is a big factor when choosing a lender. So, what can we draw from these survey highlights? Customers want interaction with their lender to be more efficient. They want to be confident that digital engagement is safe and secure. They want to have options for engaging with their lender beyond self-service. And they want to be able to do any task through digital means, especially if they understand it helps the overall efficiency of the process. Jerry, are these principles similar to what you're basing your engagement model on moving forward? Anything to add?
Yeah, absolutely. And thank you. The servicing is a huge, huge part of our success, and obviously Fiserv does a very good job with that, and we're a small group, so we outsource that product in particular. So it's vital that our customers get the service that they're looking for, and for our dealers also. So it helps on both ends, the dealer, customer, and the ultimate client. That's what drives the whole process, is to get the efficiency and to get the servicing down so there aren't really any issues. The front side is handled for the most part by the dealer, and then once we get to the servicing, it's key that the customer gets, can get someone on the phone or however they go about doing it, that they get an answer and that they get the information they're looking for.
Okay, right, and that's one of the key goals of the engagement model, is to really take a step back and look at things across all channels, across all parties involved, so that we can really start to form insights into the end-to-end customer experience. And we'll touch more on that in a few minutes.
Right.
So what do these principles translate into to make this strategy a reality? First, customers expect to engage digitally and on any type of device they have handy, whether that's their phone, tablet, or computer. One of the most proven ways to achieve consistency is to create a customer journey map across all channels. This is often an eye-opening experience because most companies don't realize the full scope of their consumer touchpoints. Once a robust journey map is formed, then you can really begin to gain insights into which workflows to prioritize in your customer engagement model. Consumers also want the experience to be optimized to the type of device they are using. One of the best ways to achieve this is to build your consumer-facing web pages in responsive design, which means they will automatically render to the screen size the user is seeing. Alternatively, you can offer a mobile app which provides consistency and control over the user experience, but adds additional costs for development that may not be necessary in some consumer engagement models, depending on your strategy. And they want to see the same information their lender or servicer is seeing. This level of transparency builds trust and will make each interaction with the consumer more meaningful and efficient. The ability to provide this level of information access starts with investing in a modern core account servicing system that supports all the necessary APIs to build out the customer engagement model we're discussing. Next, providing real-time information to a consumer means the lender system needs to support high availability ways to access that information. And it also means that when the customer enters information, the lender system can process it immediately and return a response right away. This is where configurable automation in the lender's system is critical to provide the customer experience expected as part of an efficient process. Modern servicing systems should provide a higher degree of automation for high-volume tasks, such as account payoff and termination, which in turn will provide a higher level of customer service. Modern servicing systems should also facilitate a high degree of integration with third-party data sources, such as title management, bankruptcy, military status updates, and end-of-term management, just to name a few. As an example, the servicing system could integrate with an interactive mobile web page to help consumers manage their end-of-term options. And with the anticipated rise in off-lease units over the next several years, lenders can see a great benefit from empowering consumers to manage their options at the end of their lease term. And this level of integration streamlines workflows for agents and prevents them from having to manually input data across disparate systems. Again, in turn, these back-end efficiencies will translate directly into an overall better customer experience.
Yeah, Josh, I agree with you there in remarketing and those type of areas where the customer may not have to wait for that letter to come in the mail anymore. Once their car is ready to be, go to termination or anything, something similar to that, they can do it pretty much instantaneously going forward.
Mm-hmm. Right, and consequently, I've seen many lenders start to prioritize the end-of-term management in the digital engagement model.
Right, and we're not quite, we're not quite there yet on the FFS side as far as the digital for handhelds and stuff like that, but that is something obviously we're looking at going forward to get as many points of contact for our clients as possible. And again, our demographic for some of our clients is not exactly all digital or all involved in the social media like some of the younger clients, but I think the more, like I said, more points of contact, the better.
Right, and on that point, research has shown that customers who interact in multiple channels, meaning in the digital channel as well as the physical channel, are more profitable than the average consumer. So more reason to really find that balance and understand what the end-to-end customer journey is.
Sure.
Okay. To make the customer engagement model more interactive, lenders also need a way to let customers know when they need to take action, such as updating their application status or make a payment. And when there's an update they need to be aware of, like an updated loan approval or a pending change in a service lease. Rather than being an intrusion, customers invite these alerts into their daily lives and rely on them as a way to clarify their financial lives. Fiserv research shows that while the majority of consumers are receiving alerts today for things like account statements are available online, only 44% of people are receiving loan payment status alerts, such as payment due, past due, or payment received, which calls out an area of opportunity for lenders to engage customers around their payments. 51% find loan payment statuses extremely helpful in managing their finances. 84% of loan-related notifications today are received via email, 23% via text, and only 8% via phone. However, email alerts run a high risk of getting lost in the volume people receive each day. So texting has become the preferred method to receive important alerts and notifications. This presents a competitive differentiator to offer additional notifications via text. Of the top 6 list of improvements respondents said could be made within mobile banking, 4 were related to alerts for security and bill reminders, yet another opportunity to reinforce the trust of the secure experience for digital reminders and notifications. In addition to alerts and notifications to engage customers, another opportunity for engagement is through web chat. Web chat provides efficiency to the lender through potential use of automation and common responses, while also enabling personalized responses for customer-specific questions. Much like the rest of the customer support process, web chat can also be outsourced to augment your existing staff for better coverage and overall support of your brand experience. In addition to these benefits of web chat, investing in this channel also positions lenders well for the future. As customer support systems become more advanced and automated, they will begin to rely more on data and technologies such as natural language processing to anticipate customer requests and route them more efficiently. Building a solid web chat channel into your customer engagement model will allow lenders to collect the necessary data and gain insights into their customer service quality and efficacy. But lastly, although customers want digital interaction, they also still want to make choices about how to get their statements and make their payments. Fiserv has found that providing traditional choices like paper statements and in-person payments, in addition to digital engagement, is a competitive differentiator for lenders. 46% of customers are interested in stopping use of paper copies within a year, which is up 40% year over year. But having the choice to receive paper statements supports the options that the customer expects. As an example, one Fiserv client for online statements that has a 1 million account portfolio and a 50% adoption rate expects to see a savings of $4.8 million per year. So, I'd now like to bring all this together and put things in a broader context. A sound customer engagement model is really based on three key areas. One is the customer experience, where lenders provide information to the consumer when and where they want it, and moves beyond a self-service model to true customer engagement. With the recent emerging regulatory risk, financial institutions must ensure that they are providing a premium customer experience in a compliant manner. Modern servicing systems that provide the necessary controls and expedient access to data will help alleviate some of the risk lenders face. Finally, operational effectiveness not only supports the desired customer engagement model, but also provides the necessary ROI lenders need to justify their investment. Now I'd like to turn it back over to Jerry to talk specifically about how Ferrari views customer engagement. Jerry, how did you decide on your digital engagement strategy and tactics?
Thank you, Josh. We're a unique case, I think, because we're a smaller lender, and we have a unique demographic of what we serve. When you look at the customer journey map, we have to kind of account for both the dealer and the final client, which is key in the area where you see, because we'll go from dealer to the dealer will initiate what we're looking at, and then it'll come to FFS to handle the rest of it, and then it'll go to our back-end vendor, which in this case, in a lot of ways, is Fiserv. So we've got to kind of try to peg our strategy to each of those areas. So as you can see, we've got to do a little bit of everything. For the dealers are looking for certain types of digital and certain types of access, and then once we get along to the clients in the servicing side, they're also looking for a unique approach to how they can get the information. Some of them, again, want to get it 24/7. Some of them just want to do the traditional way where they can call customer service number and do it that way. As far as the billing, we haven't seen anything yet as far as a push for digital on that end, but as you're well aware of in the industry, e-contracting is making a big push again nowadays. They tried it roughly 10 years ago, and it really didn't catch on too much, but that's coming back around, and I think this time the approach will be a little different because there is a different demographic that's going to be interested in e-contracting as opposed to 10 or 12 years ago. Again, we tend to outsource a lot of our back-end processes, which is based really on the size that we're a smaller group. So we kind of defer to the experts in that area, but we are still looking at a couple more items as far as branding, where we can have the customer go out to a website and be able to do, for example, they can check if a payment was received, they can check a payoff. A lot of cases, a dealership will use that aspect of it where they can get a payoff if, for some reason, a lot of our business is out in California on the West Coast, so we may be closed when they're doing a deal later on in the evening out there, and they'll need a payoff. And if they have the ability to go on the website and grab a payoff that way, that'll definitely help them. The way we measure our success is feedback from the clients, meaning both dealers and our ultimate clients. And we'll see them at races and marketing events, and they'll basically let us know how we're doing, and that's where we get most of the feedback. Our dealership group is the franchise group is a great group of dealerships, and we appreciate all they do for us, but they will tell us if there's an issue or if there's something more that they need, and that's really what's been driving our push lately, is to respond to their needs and what they're looking for. So as we move forward and grow, we can give them as much help as they need as far as dealing with the customers and dealing with the ultimate clients that we have.
Mm-hmm. Thanks, Jerry. I think that's a great example, and it really speaks to the dealer's involvement and importance in the kind of the supply chain in auto finance. And if we take a step back and look at what you said on a broader level, it really speaks to kind of the broad landscape of the customer journey and the different complexities and opportunities that there are out there to build out this customer engagement model. And I believe that it's better to, rather than take a big bang approach to implementing an engagement model, it's better to take a step back and, again, look at the landscape and evaluate and prioritize which opportunities will have the most impact to both the lender and their customer, as well as the dealer, for that matter.
Right, because as you well know, there's all shapes and sizes of clients and dealers. We have some large dealers and we have some smaller dealers. We have some dealers that are part of huge dealer groups who may have a huge footprint and may have digital departments that handle a lot of these things. And then we might have a small standalone store that might need a different approach. And I think it's very similar to our clients. We may have some younger clients that are new to the brand that will be more open to digital and more open to tablets and those kind of things. And then we have, and I know for a fact we have, an older demographic that is not really interested in that. They would rather be able to get something in the mail or contact somebody on the phone. So we have to be nimble with our approach, that we make sure we don't miss any client out there or any dealer out there with how we're going to supply them, the information they're looking for.
Okay. Thanks, Jerry. So to summarize, lenders should first think through the customer experience they want to provide. Then look at the systems they have today and determine what they may need to augment as far as existing capabilities or gaps that need addressed. A master roadmap for the strategy enables lenders to implement capabilities in steps instead of getting bogged down in the big bang approach. Look for high impact areas of opportunity to engage with customers. Fiserv is committed to maintaining a pulse on changing consumer adoption and financial expectations. We commission a number of surveys annually so we can continue to help our clients drive adoption and growth of new financial technologies with their consumers. We also draw heavily from our own market and solution studies and from a number of third-party studies to capture insights. The facts and figures we presented in today's presentation incorporate information from these sources, and I'm happy to share additional data with folks following this webinar. In the December-January timeframe, please check back to Fiserv.com for a summary of all the key findings from Fiserv's Expectations and Experiences quarterly study, which is most relevant to all of us in the industry. I'd like to thank Natalie and Royal Media for partnering with us to produce and distribute this webinar, as well as Jerry at Ferrari Financial Services for providing his insights from a lender's perspective. If you have any questions, please feel free to contact me at joshua.smith@fiserv.com. Thank you. Now I'll turn it back over to Natalie for the Q&A.
Thank you, Josh and Jerry. Now I'd like to move us over to the Q&A session, and I have a couple of questions for you guys. So trust, as you both mentioned, is very important in a financial relationship, and in this past year we've seen a few developments in the industry that have created some waver in the consumer's trust in financial institutions. So what are some things that lenders can do to ensure trust in this digital and to some extent anonymous new world?
Sure. So I see this as largely a perception issue. Most financial services systems and associated digital channels are reasonably secure today. However, we saw in today's webinar, many consumers don't necessarily feel that way. Therefore, I think there's an opportunity for lenders to educate their consumers on how secure their systems really are and how rare a breach actually is. Digital channels provide great messaging opportunities to accomplish this by continuously raising awareness with the consumer that their data is secure online. This will build the trust, and over time, the consumer will feel more comfortable entering their private information online, which will in turn lead to a greater adoption of these customer engagement models. Also, it's up to the lenders and their technology providers to work together to ensure their systems are kept up to date and are compliant with the latest industry security protocols.
Yeah, I would agree with Josh on that point. Most of our clients feel very comfortable with the online world. They do a lot of other things on there as far as paying bills and purchasing items. So I don't think it's too much of an issue on their end. Obviously, what went on in the financial area a few months ago, was concerning. But for the most part, I think they have faith in the system, and they've been doing it now for quite a while. So I don't think they foresee any issues or any changes that's going to stop them from doing what they're going to do online or accessing information online relative to what their lender has, or if they've got a lease information question or those type of things. I think that is something that they trust and that they know will be here for a long time, and it's here to stay, obviously. So I think they're okay with reaching out in that aspect.
And Josh, you mentioned during your presentation that 54% of consumers say customer service plays a role when choosing a lender, and we've seen that with increasing popularity of retailers like Amazon and Uber. So do you think it's companies like those that have set the standard for digital services? And if so, what are some lessons that lenders can learn from the retail industry, and what should they adopt?
I definitely think companies like Amazon and Uber have set the standard for the ideal type of engagement model that we've discussed today. Customers like it when you proactively search out ways to fulfill their needs. Amazon is great because they can predict what you want to shop for and offer the experience the consumer is looking for throughout the entire shopping experience. This is accomplished in large part by segmentation. Prime customers, for example, have a better experience, and it's easy to see the value in their Prime membership. Amazon has used the data they have on customer behaviors and have mapped the needs of particular segments to specific products and services. Lenders do this in some ways today. For example, when a customer calls in to request a late charge waiver, the agent can see the payment history and make a determination on the customer's request. Lenders can adopt more of these types of practices, including leveraging digital channels to collect data and be more proactive in meeting customer needs during the entire life cycle of the loan.
Yeah, obviously, Amazon and Uber have gotten it right for their approach to clients and to customers with their success. I think the biggest thing for us on our end is the ease of use. Clients want to make they want it to have it be as easy as possible to reach out to us and gather any information they need, or ease of use in the process of doing the application and doing a lease or a retail loan. They're familiar with the brand, they're passionate about the brand, and that approach where they can just go out and feel comfortable with our process, similar to the way they do with Amazon and Uber, helps them to make it. It's a very seamless process where they can just go right in, gather what they need, look for what they need, and then move on.
And I also want to ask you about the dealer as well. And Jerry, you might be able to kind of provide us an example of this, but where does the dealer fit in this consumer-focused self-service industry that the younger generation of car buyers are asking for? How do lenders reconcile the two sides, and what are some of the digital practices they can adopt for interacting with their dealer partners?
For someone like FFS, the dealers are a huge part of this equation. We've got a great bunch of franchise stores in the United States. They do a great job. They have a BDC in there, where a business development office that handles a myriad of customers. And like I had mentioned earlier, some of these dealerships are part of bigger groups, so they can leverage that ability to have the business flow that correctly that way. Some of them are smaller dealerships that might be their only store, and again, the clients run the gamut from younger generation, like we said, to an older generation, demographically wise. So they have to make sure they cover each of those clients and treat them as they're the most important client in front of them at that time, which is sometimes easier said than done. But the premium brand that we are, that our dealers, that's a huge part of it. They have to really take an approach where if the digital is going to work, then they can offer that. If it's going to be more hands-on, where they contact the store and talk to someone or go to the store and talk to someone face to face, that is important also. So I think they have to be across the whole platform. They have to have an approach that can handle the different types of buyers that come in to see them.
Yeah, and I agree with many of the points that Jerry just made. I think dealers will continue to play a significant role due to their physical proximity to the customer. However, in order to differentiate, they will need to compete on different value propositions. For example, online dealers will be able to compete on price, while the physical dealers can move up market and compete on more of a premium experience. Dealers seem to be making the same investments in customer experience, whether they are auto manufacturers providing a build-your-own-car site or dealers with advanced inventory selection and the virtual test drives that you see at some dealerships. The dealer and the lender customer experience can be highly complementary in an integrated manner wherever you shop for the car, then apply for financing, and complete everything upon delivery of the car. The customer will have an ongoing relationship with the lender for the term of the loan or lease, and the dealer can help the customer with the maintenance and other requests. So I see this playing out as a customer-centric solution where all three parties benefit.
True. Again, the dealers are vital for a company like ours because it is a premium experience when you're purchasing a Ferrari. So they have to make it that sales cycle can be a month long, it can be 3 months long. So they have to be intimately involved with the process and give us feedback as to how we can help them.
And we also talked a little bit about web chat, too. So I know web chat and chatbots have been increasing in popularity, but does that also mean increasing staff and expanding extra resources to ensure that consumers get instant replies and someone is managing that chat, or can that, too, be sufficiently automated?
So depending on how much volume lenders want to see in this channel, it may not necessarily mean increasing staff to support an effective web channel. For example, in our BPO call center at Fiserv, we're planning to dedicate existing resources to man those chat support sessions under the assumption that some of the call volume will be reduced and free up those resources. However, we're now in a phase where it's still really expensive to analyze big data and make it actionable, which makes it cost prohibitive in many cases to build out the automations and make chatbots effective. In the future, an established out-of-the-box solution may emerge where lenders can leverage and build out. But until then, it's going to mean more resources to build out that automation. Fortunately, I think this can be offset by cost savings from the web chat channel. In the Fiserv BPO call center, for example, we're expecting to see up to a 15% cost savings for a web chat session versus a customer support phone call.
Yes, and along those lines, we don't necessarily have the ability for the chat devices. So what we normally do is, we don't have the scale, so we leverage our back-end vendors and the approaches that they utilize to service our clients on that end. So if the vendor is moving forward with something along those lines, then ultimately we would benefit.
And going off that, would you say it's sufficient for lenders to use a responsive design for users to move from online to mobile, or are we headed into a world where lenders will need to adopt not just a mobile-first strategy, but mobile only? Is that something we should all be preparing for?
I think that as the boundaries continue to erode and desktop computers continue to stay expensive, we will see a convergence to platforms that provide a more holistic user experience. The tablet experience, for example, continues to evolve to provide that premium user experience. In the future, I expect delivery of content and customer engagement will be device agnostic, which is what I believe we should all be preparing for. But in the meantime, we continue to see mobile internet traffic grow and eclipse the internet traffic from desktop computers. Therefore, lenders should definitely continue to use responsive design and think about mobile first.
Yeah, obviously the younger generation, that's all they know. So yes, they're going to be moving forward and they're going to drive that and they're going to push it. As I mentioned earlier, e-contracting, I think, has a much better chance of being adapted this time around than it did, say, 10 years ago. The drivers are there, but there will always, you're going to have to know your client. There will always be clients, especially in our world, that want to be able to pick up the phone and talk to somebody, or want to be able to walk into the store and talk to an individual. Might be the person who sold them the last 8 or 9 cars that he's purchased, so that will always be there. But the movement is definitely towards digital. The dealers are going to have to be aware of it and adapt to it, as are the lenders. We're a smaller lender, obviously, but the huge lenders that I've worked at in previous lifetimes are moving forward at a rapid pace in order to get those devices ready and have them out to their clients so that they'll be able to grab the information real time.
And my final question, we've talked today about some of the digital features, the top features that consumers are asking for, but if you're a smaller lender with few resources, what are maybe the top 2 or 3 features a lender should focus on? And maybe, Jerry, you can speak to this to give us an example, considering that FFS is on that smaller scope.
Sure, and I referenced it earlier, the online payoffs where a client has an existing loan with us or lease, and the dealership might be sitting in front of them, on the West Coast at 8 o'clock, and East Coast we're not available to get on the phone immediately, and they may want to be able to access that right online. I think that's a huge benefit of the digital and how we are moving forward with that, and also on payment options. If a client, again, is who knows, he might be in Europe or something like that, and then was just trying to figure out what last payment was or where he is in that world, the ability to go in there and grab that information is crucial. Again, we're a small lender, and we try to leverage some of our vendors to help us in those areas, but I think those are 2 features that for someone our size is hugely beneficial, where they can grab a payoff coming from the dealer side, or if a client is interested in doing that, he can do the same thing.
Right, and I would add that smaller lenders are in many ways a microcosm of larger lenders, and as we talked about, scale is the primary challenge when building out these customer engagement models. Fortunately, there are many options out there for the smaller lenders, as Jerry mentioned, to focus on in order to provide that premium customer experience. We talked about the business process outsourcing that smaller lenders and startups can use to gain access to that instant scale and knowledge, and take advantage of platforms such as white label self-service portals that can be branded to their specifications, and that will allow access to the customer data and start to provide the insights that are needed to build out the engagement model.
Okay, well, thank you again, Josh and Jerry, for participating today. At this time, there are no further questions. The Center for Auto Finance Excellence is committed to bringing you quality content on best practices in auto lending and leasing, and we hope you will join the Center at www.autofinanceexcellence.org to receive our alerts and to participate in other Center events. Again, there will be a recording of this webinar on the Center's website shortly. Please be sure to keep an eye open for additional events from the Center for Auto Finance Excellence. Thank you once again to our partners, Fiserv and DataScan, for their support. This concludes today's teleconference, and everyone please have a wonderful day.
Thank you.